Bitcoin keeps falling, and a lot of people are starting to be afraid. Is the bottom in? Or are we going to go down even lower? Well, in today's video, do you buy or do you sell Bitcoin in today's investing market? Do we wait or do we go full into Bitcoin? All that and more in today's episode. Let's get into it. All right, everybody, welcome back. This is the Debasement Index. My name is Angel Rios, and this is a channel solely focused on building capital in a fiat world together. So, crypto, and I shouldn't say crypto, right? Because Bitcoin is not cryptocurrency as it's defined in the market, but Bitcoin keeps on going down a slide, right? It keeps on going down 1,000 day by day, 500 here. And it just seems like the bottom is not yet in. However, what I want to show in this video is that buying into weakness is the best thing that you can do right now. And not just buying into weakness, but not fundamentals weakness, but buying into price weakness. Always remember, price is the least important indicator. You got to look at other things. And that's why I want to show you in this video the things that you should be looking at in order to have that high conviction in your investment. So right now, we are looking at revised economic data, okay, as you can see in this article. Okay, basically what this article is telling you is revised economic numbers inject uncertainty into jobs. Okay. The U.S. economy opened 2026 on better footing, with the latest jobs report showing employers added 130,000 jobs in January, and then unemployment rate edged down to 4.7% from the 4.4% in December. However, the data was newly revised, and the figures paint a super different picture on this topic. The U.S. economy added just 181,000 jobs net last year. That's it. 400,000 jobs fewer than initially reported, and far from the 1.4 million jobs that were added in 2024. Is that going to make the economy take a slump? Yeah, but what's going on while these job numbers are being revised? What's going on in the stock market? Well, let's check it out. If you look at the S&P 500, the PE ratios, and if you don't know what a PE ratio is, it's a price to earning ratio, meaning what is the multiple that you're paying on that company based on the stock price compared to what that company actually makes. So price to earnings ratio, as you see here on current market valuation. S&P 500 PE ratio overview, strongly overvalued on the S&P 500. The PE ratio is a classic measure of a stock's value, indicating how many years of profits at the current earnings rate it takes to recoup an investment in the stock. The current S&P 500 ratio is 39.1. There's a 39.1 multiple on the stock prices overall in the S&P 500. This is 90% above the modern era market average of 20.6, putting the current PE 2.3 standard deviations above the modern era average. This suggests that the market is strongly overvalued. Now, why is the stock market overvalued? Well, it's because of retail investors. Even though jobs is showing a huge amount of weakness and people don't actually have money, and credit card balances are the highest that they've been in years, and job uncertainty is the highest it's been in years. Check this out. Retail investors, according to Reuters, buy stocks at largest level in 10 years. In this article from Reuters, JP Morgan says, when retail gets involved, and when retail is buying at a hype like this on a specific asset or asset class, well, it's time to rethink whether you should be buying that particular asset class at the time. Okay, because the market makers, they see this stuff. They see this and they're like, "Hey, it's time to pull the plug." Let me show you exactly what I'm talking about. So, if you look at the chart about that measures retail investor buying, it's at the highest it's been in 10 years. The highest. This is in stocks, guys. This is not in Bitcoin. And so when price to earnings ratios goes out the window and it stops being an identifier of, hey, am I buying this at, fair value? Am I buying this at a discount? Am I buying this overvalued? Every single company in the S&P 500 or most are in overvalued territory. And that's what you're buying into. Now, even if you're going into real estate, right? And you want to buy real estate, which is a hard asset, and you want to buy real estate, foreclosures are surging as US homeowners grapple with rising costs. That's insurance, that's escrow payments, that's the property tax. Okay, everything is going up. Plus, if you want to do any improvements on your home or anything like that, hey, the prices for all those raw materials and the labor are also increasing like crazy. Okay, so you have to remember all this stuff when you're buying. So it's not looking good. Look at this next one from Realtor.com. Foreclosure filings jumped 32% from a year ago. These two tourism states rank among the highest in the country. 32% on foreclosures from a year ago. Now, am I saying it's at 2008 levels? No, but it's rising, and it's rising rapidly. Now, if you're a Bitcoin investor, if you're a Bitcoin maximalist, anybody runs into one of those categories that's investing in Bitcoin. If you flee from Bitcoin to stocks because you're like, hey man, stocks are rallying, they're doing great, crypto's kind of taking a dump right now, I'm going to switch my allocation from Bitcoin or Bitcoin treasury companies into stocks, you're not playing a good game. You're not playing a good game there. And the reason you're not playing a good game is because the rug is going to get pulled. Now, I don't make price predictions in this channel. I don't say, hey, Bitcoin's going to 1 million, Bitcoin's going to 2 million. I have my investment thesis, which is Bitcoin wins in a world where monetary debasement is king. And I don't see the monetary debasement slowing down. But this time right now, Bitcoin could go lower. Now, I think Bitcoin is kind of setting up a floor right now and setting up the bottom. However, it could go down to 50,000. It could go down to 45,000. I don't know. And anybody that gives you price predictions and says that they know is full of crap, because they're always wrong. These YouTubers, okay, these financial analysts, all these people, they are always wrong about not just their price prediction, but their timing on that price prediction. That's why here in this channel, on the Debasement Index, I preach time in the market, not timing the market. So while Bitcoin is actually going down, okay, let's look at what the big players are doing while retail is fleeing the market. So if you see here on this article from CoinDesk, retails are running for the exit amid Bitcoin sell-off, while mega whales are quietly buying the dip. Glassnode data shows large Bitcoin holders are accumulating while retail remains in distribution. Retail's in stocks, and retail matters. I mean, retail matters a lot. Don't let anybody tell you that we don't. But they're flying to stocks, and they're flying to silver and gold. And I don't believe, my own opinion is that I don't believe that to be the right decision. Why don't I believe that to be the right decision? Well, I've already shown you that retail is going up in their buying of stocks higher. It's the highest it's been in the last 10 years. They're going to get the rug pulled out of them because what the whales are doing, they're actually accumulating Bitcoin while the price is going down because they understand that they're getting Bitcoin at a discount. If you look here, it's from FEMX. Bitcoin accumulation addresses see record inflows amid price drop. Bitcoin inflows to accumulation addresses have surged to the highest level since early 2022, according to data from CryptoRank.io. This trend indicates that large holders are continuing to buy Bitcoin despite recent price declines. Historically, such accumulation often precedes potential price recoveries following periods of fear-driven sell-offs. And I've covered on other videos how the fear and greed index, it's on the fear side, the lowest has been in 10 years, right? In 10 years. However, with that being said, that is when you buy. You buy into fear while the fundamentals stay the same. Look at this chart. You see the price of Bitcoin going down, but you see the accumulation of Bitcoin by large players absolutely rising above levels that we haven't seen in months. So the big players understand where the game is going, and the game is not staying in stocks. Stocks will have a drawdown, in my opinion, a huge drawdown. Perhaps so will real estate if the underpinning credit upon real estate cracks, meaning foreclosures, higher interest rates, and a lot of people defaulting on their mortgage loans. And then that happened. And what happens after that? Mortgage-backed securities crash. And then therefore the underpinnings of the credit that is propping up these real estate prices cracks. Well, real estate prices are going to go down with it just as much. So in essence, what I'm trying to say in this video, guys, is buy Bitcoin. Buy Bitcoin. This is the time to buy. This is the time to accumulate, because while retail is running from the market, from the Bitcoin market, the big players are accumulating, and they're not accumulating stocks right now. It's this run that's happening right now is completely being ran by retail, and they're gonna get the rug pulled out from under them. This is the time to buy into Bitcoin in a time of weakness. If you want to maximize your returns, if you care about the price equivalence of one Bitcoin, $2, and you want to get dollars in return, this is the time to buy. If you believe in Bitcoin and you just want to accumulate more Bitcoin, well, guess what? The exchange rate between dollars and Bitcoin is a lot better now. You can buy a lot more Satoshis. You can buy a lot more Bitcoin chunks with less dollars now, which is great for you for long-term allocation and long-term Bitcoin accumulation. So that's what I wanted to tell you guys in this video today is buy Bitcoin, buy into fear. If you're thinking about selling, don't. Just slowly accumulate more. Stop throwing chunks into Bitcoin and say, hey, you know what? Every week I'm going to buy $250, or every week I'm going to buy $2,000, and just keep that same little by little accumulation every week. So as the price drops, if it drops any further, you can go ahead and take advantage of that volatility and dollar cost average your way to the bottom. So that's my take on this, guys. Buy Bitcoin, do not sell Bitcoin. I hope this was useful for you guys and instructive. And I hope it gets some conviction back into you in knowing that, hey, it's the large players running this game right now and they're accumulating Bitcoin. So what does that tell you? Maybe we should do the same thing as the little fish in the pond. So with that being said, guys, this is the Basement Index. That's it for me. Remember, nothing in this video is investment advice. It's purely for entertainment purposes only, but I hope you found it useful. So have a great day. My name is Angel Rios. And remember, this is a channel solely focused on building capital in a fiat world together. Have a great day, guys. Enjoy your day off.